nice place with a Japanese building behind me. Okay, it's a park near Dolio, yeah, where I live. So, all right. So, how's everything? I hope everything's well with you.
Good. Yes. Yes,
Okay.
everything's good.
Okay. All right. Good. Good. So, would you like? I guess would you like to share some wins updates on your side first?
Yeah, I guess so. So over the weekend, I spent about 10 hours doing building work. So I don't know if you remember when you were there was a wall that I'd started to build. So I finished that wall. It took me about 10 hours.
Okay.
So
Okay. Nice. Nice.
lifting up stones, mixing cement, putting stones in place. And I mean, I say I've finished it. There's actually a final piece to be done, but broadly speaking, it's finished. And then yeah, so my back aches and my hands are stiff from grabbing things. But I got up early and did some yoga, so it's part of my morning routine. So everything's good.
Okay. Nice.
Second
Nice.
week, I did RDOS for the week, which is interesting. Um, so I noticed there was a difference. Oh, excuse me, sorry, I beg your pardon. I noticed there's a difference for the second week that I did it to the first week that I did it. So I'm just gonna, because I'm writing it all down. We'll see where the trend lies and what
Oh,
benefits
nice.
it brings.
So the others, are you doing it for the same persons or is it different people that you're doing it with?
Me,
Oh, I see. Okay. Okay. I see. Okay.
you can do it on
So
yourself
I see. So you're doing that on a weekly basis or on a daily basis?
weekly.
Weekly. Oh, okay. Okay.
I've done
Not
it on a daily basis, but the thing is, it does. You can go really deep with things. So rather than go quite shallow and go, right, let's get this done, you do it on a daily basis. You by nature going to make it slightly more. What's the word? You're going to want to make it quicker. So doing it on a weekly is kind of interesting because, yeah.
okay. Okay. Excellent. Excellent. I see you're having a lot of workout from from the weekend, which is good. All right. Great. So, all right. All right. So maybe I'll also share a bit of my wins. Okay. So basically, well, I'll share one that's so you know that I think you know that I visited the green building last week, right? So I think that was definitely a peak experience, since I've had a one-to-one chat with the man, behind all that. And so one thing I think it's going to be significant is I actually signed up for a training course he offered to basically learn more about basically the construction ecosystem in Taiwan for the next 12 weeks. Okay, so this is something, it's a 2.5 hours per week on Tuesday. So I see this as a heavy lifting training to really get deep into this part. Um, how well this play out, I have no idea, except that I already know that this man is fairly well connected. So, a lot of things could potentially spawn from this, including and hopefully getting our 1,000 millionaires members to the JCF by by whichever deadline we have designated. Okay, so there is a possibility, and I'm trying to link up the two. By doing perhaps real estate tokenization. There is a topic to be discussed about regulation. Okay, I think that's probably of interest today. Besides that, another couple of wins on the JCF part. I think subconsciously I was quite anxious to meet up with you. Okay. Because I know we're kind of stuck at the point with regard to, and I read your message notes, your survey about £10,000, right, for getting a regulated approval in UK, right? So obviously that could become a stealth mate. So personally, I was anxious, and I think that anxiety probably played in my this, which actually caused a lot of heavy lifting thinking. Anything from connecting with my 10-year future self, looking back, thinking about anti-fragility, thinking about any other ways we can move forward. And in fact, I probably woke at about 2 or 3 a.m. this morning, and I bed just thinking. And finally, it all came to one piece, which is go decentralize. Okay, I'll elaborate a bit about this later, but essentially, I think there might be a way for us, for JCF to actually move forward in a more decentralized fashion. I basically draft down the ideas and put that into a blog post and publish it as the September 2023 JCF update. So that actually was done I think I worked on it for about 3 hours. Okay. So that's one blog post posted. And the other thing is regarding the investment strategy. I took some time to make a recording for it. This is something we might want to, check over to see if you agree. Okay, if okay, I can maybe delegate it to Poet. Okay, so that recording is also done. And I actually just discovered there was another recording recorded almost a year ago. Pretty much exactly the same thing. Okay. Except that it wasn't really delegated. However, there's one difference as well. In last year's recording, I discovered in the procedure, actually, there's a step to check on C20. Okay, C20 is crypto 20. You might have heard me mention that was actually the inspiration for JCF. It's index crypto fund. And I just check on them, and they are actually closing down, okay, due to two issues. One is the tighten up regulation. Okay, it's a Cayman Island company entity. The second is they actually have exposure to FTX and also some into maybe some of the and Celsius. I'm not sure exactly how that play out, but Celsius went bankrupt, FTX bust. Okay, so I suspect what happened was they actually had maybe a significant amount of holding that was on the exchange FTX itself. So when FTX went down, they were losing some position for that. Granted, they still do have assets, so they are actually, they actually decided to just shut down the fund and give back the remaining assets to investors. Okay, and there's a grace period for that. But what that means is that C20, C10, and other, I think, funds offered by what's called Invictus Capital, it's essentially all gone, all closed now. So, all right. So yeah, that's an industry, I guess, update. Yeah, but what I kind of saw from this is, well, I think at least we're still operating from that respect, and we're still thinking about ways to move forward despite the regulation environment. Yeah, um, that could be a sign. Yeah, and I like to think that we want to be more anti-fragile than some of these other, potentially bigger companies, entities. All right, so that being said, those are my wins, and yeah.
Do you mean
So in a
anti-fragile?
nutshell, what I'm sorry.
Well, you keep using the word anti-fragile. What does that mean to you?
Okay, so anti-fragility. I've actually been giving a lot of thought on that. It's about, when you are being hit, uh, in typically what will be characterized or as a setback, as a failure, you actually, well, you are not killed off by it. You survive, and in fact, grow to become stronger. Okay, as a result of that. So that's kind of the anti-fragility. So it's not just survival. It's not just surviving a catastrophe. It's about actually becoming stronger after a setback, after a catastrophe. Yeah. So, and I think there are elements to that, yeah, that will actually make whether an organization or a person to be more anti-fragile. So, but
I haven't
Yeah,
finished
go
reading the
ahead.
book, so I read the book every morning. So I read, I don't know, half a dozen pages a day, something like that, maybe, because that's what maybe a bit more than that, but anyway, while I'm drinking my coffee and eating my breakfast. And whilst he hits upon that succinctly in the first beginning chapters, it's not a recurring theme. What he talks about at the moment has been about how science history is written by losers. Right?
Written by losers. Okay, all right.
So the idea that scientific theory or any economic theory or any theory that academia puts out, and he uses this analogy of where how a professor goes out and tells the birds about aerodynamics and tells them how to fly, and the birds fly, and therefore the academic is correct in that without the education the birds wouldn't fly. It's a nonsense, because the birds were flying long before the academic turned up. And so he uses that as a leverage to talk about how and so this morning, for instance, he gave an example where I think it's like 100 times more discoveries were made during the Industrial Revolution by not priests, but clergymen. Because the clergymen at the time of the Industrial Revolution had time, everything was taken care of. Effectively, they did 1 day a week, right? But they got given a house, they got given servants, and they got given a salary. So they have loads of time. And so there were loads of examples where clergymen created these things. And also where they weren't clergymen, they were people who were tradespeople that were tinkering and tweaking. And so the idea that they practically had to solve a problem to move forward, right, to improve their investment. So whilst he talks about at the beginning of the book how Lebanon is a place of anti-fragility, because no matter how many times it gets knocked down, it comes back stronger, which illustrates your point about what you said anti-fragile was. Not having completed the book, I think there's more to it than just that. And I don't really understand how Ben Hardy talks about anti-fragile, because I've not really, I mean, he says it, but I can't remember the reference when he first brought it to mind, and therefore, what does it mean? So I'm intrigued about what does that mean, because I'm trying to incorporate that. So for instance, with our current situation, where it looks like regulations are, and here's the interesting thing, right? So I think what government has understood now, generally, is that Bitcoin, cryptocurrencies will not disappear, and they can't combat that through regulation. What can they do then? Well, they can actually regulate economic markets. So that's why so I gave you the example of BlackRock, right? So there's a dozen other people, organizations. I reckon BlackRock have been told, you can go to market with this now. The SEC will pass it. because that's their way of regulating. So they'll get rid of, so you won't, so that's why C20 have closed down, is because they can't compete. Or if
right.
it's run by this other group, Invest, I don't know them, but perhaps is better off for them to submit for an EFT model and work on the open market as they would do with any other strategy. So that all makes a lot more sense. What I don't understand then is what you mean by going decentralized will enable us to overcome deregulation or the regulation.
Right.
And then B, what you've already posted on a blog about this, have you?
It's been shared on Slack as well. I mean, I posted on the Slack, I think both the Slack general and also JCF.
Right.
Yeah.
So when did you do that?
I this morning. It just happened.
Right. And you posted it and now you're talking to me about it. That's good.
Yes. So it's still rough though. It's rather just general direction thoughts. I have specifics that I can discuss and share with you. Okay, more specific stuff. Yeah. All right. So I guess anything. Yeah. Thanks for that feedback. I think it's an interesting remark that C20 is ceasing operation because they might realize it's not a fun game competing with institutions such as BlackRock. Yeah, but okay.
No, I didn't say that. I didn't say that at all.
Oh, okay. Yeah.
It's just
okay.
Structured as they are now. They are the who did you say is behind C20? What company?
It's actually a South African. The team members are South Africans, but the company is registered in Cayman Island.
Yeah,
okay, so they were one of the earliest players. It's a Cayman entity, and I think they got local Cayman approval as well. From the Cayman's financial. So they are a somewhat regulated entity. But I think they're closed down because the assets have lost in value. In other words, they're losing investors' money, and plus, I think the regulations might have gone up a level that they no feel that given their resource, it's a game that they can play or can afford. Yeah, so I think that's why they decided to close down. Yeah, but anyway, so
they're
I'm sorry?
they're already investing in other elements of the market and have now closed down C20 so that they can operate in a more regulated manner. Doesn't mean they don't want to compete with BlackRock. It's just that they're now they took an opportunity to operate within an unregulated space, and are now we're going into a regulated space. That's why I'm asking, what's the name of the company?
Oh, Invictus Capital, INVICTUS, Invictus, as in invincible. Invictus. I think that's a Latin word. Invictus Capital. You can Google it, and maybe go to their official website. Yeah.
Yeah. Okay. That sounds like a familiar name. I bet you they've applied for an ETF.
Okay. All right. Good. So, any topic you'd like to discuss for today?
Well, I thought we were talking about it.
Okay, already? Okay, all right. So the decentralized thing, or the how to get around the current regulation, is that the main topic?
Yeah.
Okay.
Well, either how to become regulated or how to get around it. But I find getting around regulation is less likely than getting regulated. But anyway.
Okay. All right.
Because if you're getting around it, Shunyun, this thing, if you say to the world, this is how we get around regulation, that doesn't
sound good.
Yeah.
Right. No. I fully understand. Yeah. I have nothing against regulation. I am for regulation actually. Okay, because regulation actually, it helps to clean up stuff. It's just that I think at the same time it should be, I guess, well, I guess you do want to give space for startups, right, for innovation to grow, and I'm also for innovation. Okay, and another thing is for something such as blockchain was designed to test the current financial system. So so there are some interesting things interplace. All right, so let me share my current thinking, okay, and appreciate it for your feedback. All right, because this is also relevant to us now. First is seems like the only way we can go past the 10,000 pounds UK, for regulation, getting regulated. That would, that's obvious. We have to seek for investor money, right? It's not probably something we can afford now. So obviously that's a route that we can continue. Okay, which I believe it's also something we've been doing, seeking investors. So, that's something that I guess it's just to continue on that. The other thing is to get regulated, which I believe should probably be less
Cutting out,
expensive. Okay. I'm
Shingyun,
sorry.
you keep cutting out.
Okay, okay. Is this better now?
I don't know
Let
until you
me
start talking.
okay, let me move yeah, maybe to another place. That is it better now?
Suppose I don't know until you start talking.
Okay, okay. All right. So I was saying that so one thing to get regulated is to get it in Taiwan. Okay. To get regulated in Taiwan. And this I I suspect this may not be as costly, okay? Although could be time consuming. Okay, this is something I'm not sure yet, but it could be a tedious process. It could take potentially several months.
Any one of those countries is going to be a tedious process.
Okay, okay, all
The
right.
UK, the US, it is a Switzerland. They're all going to be tedious because every one of them
Right.
is want to know who are the founders. Like, so for instance, Switzerland, you have to have 3 co-founders. You can't
Oh,
have.
okay. Oh, really? Okay.
So the UK got to be a limited company at the very least. Okay, that's easy. But then all of them are going to want business plans. One are going to see track record, not necessarily track record, but understand and whether or not you're like a company that's got people in there on the on your board who have got the experience and the expertise
Right.
to deliver.
I
And then
see.
all your processes are in there. So whether or not you outsource your KYC and AML or whatever, but having a planned structure so that if X happens, Y happens, and so on and so forth. So you've got to write all of that up. It's got to be there, black and white, and then some pen pushing bureaucrat is going to go through it and tick the boxes, and then they're going to go, "Thank you very much." And you've already paid them their 10,000 to get there, right?
You pay,
just
and you may or may not get approval, right?
Exactly, it's bollocks. But the theory being is that once you're regulated, then you've got a license then to go out to the market in general.
Okay, okay, all right. So this gets me, well, either case, it's definitely a possible path, but looks very 2x to me. And, could be an uphill climb, okay, given who we are, what we are now. So this has turned my attention to the other direction, okay, which is the question of how can we still do the core of what we're doing and while still getting regulatory approval. Okay, and is there some way that we can actually make this still work and happen? Because, technically, technology-wise, platform-wise, market-wise, there are still a lot of things that, that's worth doing, and we have been doing. Okay, so I think the current idea is that, well, I actually, okay, to make the long story short, I was thinking sort of ahead of my time in, let's say, 10-year, 10-year, 20-year future self and looking back. So if we've already achieved certain things by that time, then what advice would I be getting? And when I was looking, and also what I will be, what we will be thinking at that stage. And I knew I've known the answer for a while, which is to actually construct a $120 trillion, United Nations level fund, okay, to actually make basic income universal. Now that's a lot of money, a lot of responsibility. United States last year had an annual budget of 6 trillion only. Okay, so we're talking about, and the global wealth is for some 400 plus trillion dollars. Okay,
Last time
like
I
the
checked, it was
global wealth.
500.
I'm sorry,
Last time I checked, it was 500, but
500 trillion. Yeah, probably now it's 500. Okay, that was a couple of years ago. That was 2021, I think, the figure. So yeah, 500 trillion sounds right. Okay, so I guess the thing is the money is there. It's just how they are being used and spread. So what I was saying is that one potential path towards that is if we actually have 1 million funds, okay, averaging about $100 million in worth in assets. Okay, so that actually adds to 100 trillion. So if we're talking about 1 million funds, right, then likely it's not going to be managed by us. Very likely it's going to be highly distributed, highly decentralized, and by all kinds of different entities, organizations, companies, or even local, or even governments, or churches. Okay, so when we when I kind of start to see things from that picture, then it kind of makes sense and relevant to now, which is if that's the future, then why not we just start turning to that direction now? Meaning that perhaps we should not be the asset owner, but rather we should work with and serve the assets owner. Okay, so in other words, assets owner defined as the people who are actually holding and managing the assets. Okay, they could be fund managers, they could be real estate owners, could be whatever. Okay, they have something valuable. And and if that's the case, that also means the regulatory burden will be on them, not us. Okay, so this is actually the model. Remember the other company we talked to? I think post collision, the one that's doing the liquidity pool, right?
Mhm.
Right? That
Yeah.
I think they were doing a follow up just
Fluidify.
recently. Yes, yes, exactly. Fluidify actually has that model. They don't touch regulations. Okay, they provide the information. And if any company that's operating, managing money, assets, using those info, they have to get the regulatory approval on behalf, for their clients. So I see that one potential angle or pivot for us to take is to be in a similar position where we are actually serving the assets owner. Now, the interesting thing is, uh, if you really think about this model, in some way, it's already happened for us. Or, I mean, we can see the elements of that in our current operation. I'll give you an example. right now, actually, the assets, I mean, the current assets JCF is holding actually rests on, when it goes to Binance, it's actually in my personal account. Okay, my personal Binance account. Because again, we tried to get proper account from Binance, but that took a long time and didn't really happen. Okay, it was taking just too much time and effort to get that process. So until now, it's still in my personal account. So what that means is, and the other thing is, if we are helping someone or some organization to manage just a small private fund, for a small group of people, closed door, not really like open, public, and to, unspecified individuals, then at least according to Taiwanese law, I'm not sure in other jurisdiction, but I'm suspecting something roughly similar, is that it may not require the same high level of regulatory approval as, some, because it could be more or less like a private equity fund. Does that make sense? So I guess what I'm saying is, if we use all what we currently have, okay, and I think we can roughly break the current JCF systems into three components, or three quote unquote useful components that could be relevant to any kind of asset or fund managers that might be interested, to do something on behalf of our clients. So the three components are, the first is actually assets. Okay, so basically holding, managing assets. Assets custody, custodianship. Okay, holding assets, holding crypto assets. The second, so that in itself is actually a service of value. Okay, keeping assets somewhere safely, right? And the other aspect is the investment strategy part. Okay, so this is where we are currently using, let's say, index approach. We're thinking about doing the, dollar cost average DCA, and there could be others. But the other second aspect is the investment strategy approach, the aspect, okay, which is about the question of how to grow your assets to bigger value, right? And the third, I would say, is actually about account management. Okay, if it's more than a person whose whose assets are being managed or being invested, then you have account management, you have KYCs, you have invitation referral, all these issues. Okay, so we kind of build a system around that part as well, right? Now, I guess one of the interesting thing is, if we take these three parts, so I would say that it's asset, strategy, and account. Okay, if these three components are turned into some kind of cloud service, okay, so that any organization, that it be a company, a nonprofit, or even an individual, okay, let's say a wealthy individual or a family, right, that wishes to do something like that, then what we have to do is we help them to set up their operation so that they still have assets custody under their own hands. In that sense, we're offering services in terms of software, in terms of algorithm, right? In terms of integration, and for a fee, we can still leverage the same, because, for example, in the dividend payment, we actually take about 13% of the profit, right? And on the wealth platform, it's, I think, for the tokens that's being issued, I think
we don't take 13%, Shunyun.
13% is from the dividends being paid. Okay,
No,
being paid for.
Yeah,
no?
So the dividend, right? My understanding is that the dividend is 100%, right? So if you've grown from 100 to 120, that's 20 is the dividend.
True. It's
75% is kept within
right. The dividend pool. Yes.
Yeah. So 25% is shared. So you're making 13% of 25%.
Right.
7 point something or whatever it is.
Right. That's right. That you're right. You're right.
No, it's not even that. It's 3 point something.
Right. It's about 3%. Yeah. So I mean that would be what the JCF will be getting. Okay, for providing the service. We can still retain that kind of model. Okay. So I guess
But
the
guys are already
difference.
doing this though, Shunyun. So that's what
I'm sorry.
Endotech are already doing this. And
Right.
Endotech AI and machine learning and have got the relationship with Binance and others and are already delivering on it.
Okay. Right. So they probably are doing the investment part. Okay. And they also don't touch the custodianship part, right? They allow
Correct.
you to be the custodian, right?
Yep.
So I guess what I'm saying, and they definitely don't have the social dividend part, right?
No.
That's definitely not in what they're offering. So what I'm suggesting, what I'm thinking is, okay, this is also what Ben Hardy has been saying. What would you do if you're starting from, blank state, like start anew? Let's say we're starting JCF right now, like from zero. But given our current knowledge and experience and what we understand about the industry, right? How will we do it? Right? That was kind of the question I was asking myself. And if we also knew, right, right at this moment, we're not just building one or two funds. We're going to support 1 million funds down the road, 20 years, 10, 20 years down the road. 1 million funds, okay, in all kinds of different jurisdictions, complying with all kinds of crazy regulations, okay? So, you get the picture? I mean, I think we
I
don't
get
want
it. So
to.
I'm still waiting to hear what is the relevance about decentralization.
Okay. So the decentralization part, I think the most relevant part is about assets ownership and custodianship. That will be one thing we don't touch. Okay. It's essentially the question of how can we design JCF so that we are not the assets custodian. Okay. Because I think for most part, in terms of the regulatory requirement, or the regulated entity thing, it's the fact that if you are holding assets for other people, then you have to be regulated, right? Because think about that. I mean, at least I know that's what the Taiwanese law kind of dictate. Okay, that's kind of the condition. If you are doing any kind of crypto, management holding on behalf for other people, for clients, you have to get a license and be regulated. Okay,
Well,
so
I mean, if you're a business operating in the UK with that, then you've got to be regulated. It kind of makes
right,
JC UK irrelevant, actually, because if
okay,
we associate that with, I mean, whilst we're not holding any, whilst the UK limited company does not hold any asset and does not do any transactions,
right,
it's just a shell, and therefore that's fine. But if we were to actually take money in the crypto context and do any form of investment, then we would need to be regulated by the
exactly.
FCA.
Now, I think it would be a different story if what we're doing is not to invest on behalf of other people, but rather give people the tools and the choice so they can do them themselves. Okay, now the do them themselves entities, what I'm talking about, could be anything from, let's say, a company, okay, a fund manager, or individuals, wealthy individuals, Okay, so in other words, we will be serving them and also educating them about how they can set up and maybe helping them as well. But in the end, I think one important differentiation is who holds the private key, right? And if it's not us holding the private key, then I think that's, then in essence, we are not in any way, being managing or holding assets, but rather providing some both software and perhaps also consulting services, okay, for these other entities.
So who holds the key?
I'm sorry?
So who does hold the key?
Okay, so that's something, depends on their scale and their intention. It could be themselves. Let's say if it's a company or if it's a church, right? Or it's a, wealthy family, or if they don't want to hold the key, they could also leverage existing approved regulated custodianship. For example, any one of the public exchange will probably do that. For example, when you apply for a Binance account, right? Binance in essence is your custodian, right? You put whatever fiat or crypto to Binance, so they are holding your assets for you. They are your custodian, and they
Yeah.
bear the regulatory responsibility, okay, in whatever jurisdiction, right? Make sense? So,
Yeah.
but what we can do is that, let's say, if there's a wealthy individual who's interested to leverage the, let's say, index strategy, right, for safe investment, who also wants to do regular crypto donation for charities that he or she wants to support, right? What we can do is we can provide a service to help this individual to set up something, right? To actually set up and then make it operational, right? But this individual will be in charge for both the assets and also the selection of the investment strategy. What we will be doing is providing both the system, okay, the software, and also advisory, right? And the advisory can come free or paid, I guess, depending on the situation, right? Does that make sense? And in fact, this is something that potentially can also turn into some kind of education content course or info products that we have been discussing about in our funnel marketing approach.
Okay, and still, there's a
Okay.
DAO come into it. There's a decentralized bit into it. It's all theoretical about if maybe, but where are you practically saying we make it a DAO? Who's going to have control of the assets then? The DAO? If so, who is a member of the DAO? How does it work?
Okay. So in essence, the members of the DAO, or should there be a DAO? Okay, it may or may not work with a DAO model. Okay, in the case for DAO model, I think what happens is the smart contract will be holding
use the word DAO only because of the word decentralized. If you think that there's a difference between the two, then I'm happy to. Then I don't understand what that difference is, so you'll need to tell me.
Okay, I'll give you an example. For example, like right now, how JCF operates is that the assets are stored on Binance. Okay, so Binance acts as the custodian, right? And
Yep.
we have the investment strategy that is pretty much sitting on our servers, plus human beings pressing the button and doing judgment calls regarding whether we enter or exit positions. Okay, so that's a combined system of human intelligence plus some machine actions. Okay, because the machine will, dictate the top 10 ratio, whatnot, and do the tradings on Binance, right? Okay, so we have the strategy server that's sitting on our server. Now, the reason why the strategy will work is because we provided with the Binance API key. Okay, so Binance would allow access for our server to do the actual trading in out of position, or buying the top 10, whatever, right? Or liquidating that to stable coins. So in this case, what happens is there is no DAO, in the sense that there is a smart contract that actually holds crypto assets and that actually takes votes. Do you see what I'm saying?
Takes.
In this case, there is not a DAO, there's not a DAO, okay? There is the JCF contract that issues the JCF token, okay, as a representation of the shares into the assets held on Binance, okay, as a and you can invest to get JCF tokens. You can redeem your JCF tokens in exchange for whatever stable coins you liked, right? But there is no voting. Okay, if so, I don't know if that qualifies as adult in your mind, but
No,
I guess
I'm
what I'm
just
saying
look.
is,
You started the whole thing by saying the solution that you've got is that we become decentralized. I still don't
right.
understand what that
Okay.
actually means. Where's this?
Okay. So the decentralized part is basically we don't try to hold and manage assets.
Okay, so who does?
The individual assets owner, clients, or fund managers. They hold the assets. They have the keys. They have the private keys. They have the access rights to the assets.
Right. So the only difference between
So that
you see
does
the
it make
value
sense?
of it. Yeah, no, okay. So fine. So the ownership of the key, the ownership of the asset sits with the people, and all we're giving them is a trading strategy.
And also a donation
And
mechanism.
yeah, we give them a trading strategy, and then on the back of that, we take a fee, and they accept that they're going to donate a certain amount to somebody else.
Right, exactly. And part of the
Okay.
service or the value is the
In that
integration
case,
of everything.
no, okay, fine. Okay, I get what you're saying. Then that's okay. For me, that's not decentralized.
Okay, all right.
It's just
Okay.
allowing the person to own. You see, the thing is, then there is no, uh, okay, then now you're operating as a financial advisor.
In
You're
a
now,
sense, right.
well, not in a sense, you are, because
Okay,
you're saying,
okay.
take your money, and our strategy is to take our money and we put it in X. You do the same
Right.
in your remove your money from X, put your money in X, remove it from X, put it in Y, etc.
Right.
Telling people what to do,
Right.
and then you're taking a fee for that.
Mm-hmm.
So you're still going to be regulated by the Financial Conduct Authority or other. Your
Oh, okay.
is a slightly different entity, so you'll be measured differently, and it might be that you'll be a cheaper category. So,
Okay,
for
I see.
instance, with the Financial Conduct Authority, the category 1 was something really small, like £500. So we fell into category 6. Now,
Okay.
personally, I think it's just the categories are there as a barrier to market to stop
Right.
any idiot up and
Okay.
abusing.
Right.
Okay. So fine. Take the custodianship and keep it with the individual. The thing about Endotech is, as a retail investor, you need to have $50,000 before you start playing the game with them.
Okay. So that's the minimum requirement for their clients, right?
Exactly. Right. So they're already after the millionaires. And if anything about human nature is people like exclusivity. So to be a member of a club where only people who can afford to be there is there, then that's the reason why they're there. They won't go to the cheap golf club where everybody can play. They'll go to the exclusive one where only VIPs play. Right?
That's a good point.
So you then have a different model. Now, the thing is, they've got a proof of concept that they can say, our models so far have given 350% return on investment up to 5,000% return on investment. So if you're sitting there thinking, well, let's go with that, the best that JCF can offer is 32% return on investment on a 3-year average. Right? So regardless of whether or not one sits there and goes, well, all right, let's keep the custodians as the customer. The customer is the custodian, right? So we're not holding their money. We're just giving them advice. And the cost of that advice is a percentage. Plus, we're giving them the platform to do some form of social impact. And this is why tax is important, because a lot of people, when they give to charity, then they get tax relief. So, for instance, in the UK, and I'm sure the Americans have got the same, if I donate £1 to a charity, or for every £1 that I donate, the government will put 20 pence in, based upon the assumption that I pay a minimum of 20% tax. Okay, so
nice.
It's a way of helping. It's a way of helping non-profits operate. Now that's why, but you need to do that through your tax accountant, right? That needs to be represented through your tax. So, there's a whole quagmire of that. But anyway, and if that's an element of what we do to stand out above everybody else, then that needs to be tied down. So I think account management, I'm not really sure what you were meaning about that.
Okay, that means that, let's say you're doing that not just for one person. Okay, we're actually doing that's, for example, for a church group, right? So there's probably 50 to 100 individuals within the church group, and they would like to have some kind of, crypto assets management that, that can grow. Okay, some strategies, and also a social dividend mechanism. So that means you want to have accounts, right? And also KYCs, right? That's basically done for you. So that's the part where I'm, and also donation, that's, I guess, ready. So that would be the accounting part, I guess the accounts part. And obviously, I think what might be useful is that, let's say if you actually, as an individual, you want to participate in multiple funds or multiple, I guess, managed by different fund managers or different organizations, right? In other words, different tokens. You want to take advantage of different tokens. Then, so one thing I'm thinking about potentially that what we can offer as a unifying service is that you only have to have one account with us to gain access to all these, social investment opportunities or investment opportunities with the social dividend aspect, right?
So who sets up the account?
I'm sorry?
Who sets up the account?
So the accounts in that case may be something we are managing. Okay, so in that sense, we might be managing the accounts for, the various entities, fund managers, companies, organizations, charities, or individuals. Okay, so that could be
But does that
and
still each individual in the account has the custodianship of their wallet?
yes, the custodianship is still their own. Okay. We again, we don't touch the custodianship of for example, they could be having their finance account, for example, right?
So it's
They,
still going to take an individual to actually act upon the advice given.
yes, at the ultimate level, it's an individual that has to, I guess, give consent, right?
So practically, okay.
So picture it this way, though. It's kind of like, you probably know the social logins offered by Google, Facebook, right? Whatever, all these other organizations, right? So let's say you just simply want to have one account that you can log into and access all the various, crypto instruments, right? That potentially are managed by different fund managers or organizations. But you do want to use just one account to manage all your assets, right? Or all the other wallets. Now that is something we might be able to offer. So I think this goes back to, I'm still thinking about our core three pillars in terms of safety, accessibility, and impact, right? I mean, it's just now I'm kind of turning around and think about now, how can we do this in a decentralized way? And how can we, let's say, for example, not touch assets custodianship while still providing
By
safety,
decentralized, so
accessibility, right?
your definition of decentralized in this context is basically not being a custodian.
I'm sorry, you mean not in a custodian?
Not being the custodian.
Correct. Not being a
What you
custodian
mean.
is one big part. Yes, it's one big part.
So when you say decentralized, you mean not being the custodian.
Right. That would be true. Right. I think
Because,
that's the main.
or is there, that's the main? So what are the other elements of
Okay.
being
The other elements is the investment strategy potentially can also be decentralized. Okay. In the sense that, okay, we can imagine potentially there are many different kinds of strategies, right? That can be played or can be developed, devised. Now that's a rich space. We might offer a few strategies initially, but maybe at some point that is something that can be opened up as well. Okay. Now there is another potential aspects is yeah, I think the decentralized part is mainly about the assets ownership custodianship. Yes, you're right. I think it's mainly about that.
Okay.
The other two aspects in terms of strategy accounts, I think, they can be centralized, managed by us. I think that's fine. Or, we as a gateway, because, for example, we might leverage, let's say, Indotex, right? It's also a possibility that we are building something on top of their service, right?
Well, the thing there then, you see, so with Endotech, that's the retail investor has to put in 50,000.
Right.
A financial institution
Mm-hmm.
would have to do something else. I would probably have to put more, right?
More, right, right.
I'm guessing.
Okay.
So, you see, here's the other thing. So I've got a few things bubbling in my head at the moment. 1 second. Right. A couple of times you said too much time and effort, right? You mentioned that at the beginning, and you mentioned that for the licensing, to get a licensing in Taiwan. And then you mentioned it for Binance when you defaulted to the personal account as opposed to getting the corporate account because it took so much time and effort.
Right.
So I think one of the things that we have to be careful of, and I think, you know, so when we were in Canada, right, and we were talking about, well, how do we get payments through credit cards? You were ready, or, you know, take payment. You were ready to work a kind of system that would have got payments through on one account, and then you would have transferred it across to another account. And I wasn't happy with that because I just thought that it wasn't set up right. And that's because we were the idea was, well, how do we get this done today? And it was just joining a lot of dots, which would have got it done today. That's getting things done quick. It's not getting things done right. And I think if we're dealing with other people's money or other people's aspirations for what they can do with their money, then we do need to think about things about doing it right. So the thing about whether or not, I mean, you said you would go away and find out what the process would be in Taiwan, right, to get licensed. Yeah. So, but that hasn't happened yet.
No,
we don't.
That hasn't happened yet.
Okay, no. So we need to know what we're dealing with and deal with the facts.
Okay.
Not the assumptions.
Okay. All right.
So what will the license allow us to do? How much will it cost? What is the likely amount of time? I can imagine doing it in the UK, even with a lawyer who's paid a lot of money to do it. It will cost somewhere between £10,000 to £30,000, and it will probably take 3 to 6 months.
Okay, that would be a reasonable scenario. Right?
That's a big guess, but I'm thinking that's the kind of ballpark we'd have to be looking at. Obviously, if we can get it done quicker than that, cheaper than that, brilliant. But I'm guessing that's what it would take. And it may or may not be the same in Taiwan, but we don't know. Obviously, if the thing about the FCA is it's on their website, they make it very clear for people to understand. They're very transparent. The Swiss are not as transparent, but they put a lot of loading into, you know, the regulatory aspects, and then they don't do it all in English. So you know, it makes it harder because I don't speak German, French, or Italian. Coming back, so that's those are sorts of things I've been thinking about. The assets sitting with the custodians, yes, I think that's actually a good idea. And so long as what we offer is workable around that. And then it comes down to a very simple
also
question.
Convenient to the clients, right? It has to be convenient, accessible to the clients.
Well, access to their wallet? Well, they've got a wallet, right? They actually have, all of the customers so far have their own wallets.
No. I'm talking about accessible in terms of a regular investor. It will be easy for that person to join, right? To set up. This is what I'm talking about. You know, somehow we have to make it easy for that to happen.
Here's the thing, right? My wife was on a webinar over the weekend. And 2 things, right? First, Saturday and Sunday, right? It's like an all day, pretty much 5-6 hours or something like that. The first day, she went, after a couple of hours, she went, this is rubbish, because it said it was meant to be a members only meeting. And there are people who are not members, and they're just doing a rah-rah buy our product day, right? So that's the first thing that pissed her off about these people. Because she's already a member, yet they wasted her time because they wanted, because they were doing their rah-rah sales pitch. So she walked away. On Sunday, she joined it, and at different points in the day, I was dipping in and out of the house. And the first point she made was, people are complaining that the strategy isn't working. So I wrote, maybe the strategy isn't right that you're teaching us. What this organization has done is, do you want to learn to do crypto and make lots of money? Yes. Then sign up. We'll show you how. We've made all of this money. Look at us. We live in Dubai or wherever, and live our dreams on yachts. Rah, rah, rah. You can be just like us with only 2.5 minutes a day. Sort of rubbish, right? So of course people buy into that. They've got, what amazed me, and I told you about this earlier on, is when I watched the first webinar, because I was in the room at the time, there were people from all over the world. All over the world, America through to Asia. So you've got this massive scope of people all desperately aspiring to try and make money out of crypto. Now get this, second time I walk in, there's a fellow on the screen going, well, quite frankly, John, I'm just not excited about this strategy. In fact, when I think about doing my crypto trading using this strategy, I think I'd rather be ironing my socks. Can you help me out? Now, the point there is people were dissatisfied with this entity because they had sold them this glorious idea of living the dream, but their strategy was not working. Whether it's too complicated, whether or not it just doesn't work because it doesn't work, whether it's because it doesn't translate, because the person sitting in the desk doing their own following the strategy has to be pulling the trigger at a precise point in time.
Right.
And it's all right, the analysis of the guy, the trader, going, yeah, this is the right thing, this is the right signal, I'll make this point, right? So that comes down to the investment strategy that you talk about. I don't think at the moment JCF has a viable investment strategy because it doesn't invest.
Okay.
You're currently out, you're currently out of trade, right? We're out of position.
Right. It's out of position, right?
So the fund concept isn't working because it's not working. Now, I say it isn't working, not as a general thing. It's just we're not in any fund, right?
Not working at the moment. Yeah, at the moment.
The dollar cost averaging idea is not being implemented. Maybe that's a better phrase, right? It's not being implemented. So neither of those two are being implemented. Liquidity pools not being implemented.
No.
None of these things are being, and if they're not being implemented, then there's no return on investment because nothing's being invested. So
True. Right.
How can we say legitimately we'll bring you a return on investment? Can't. And where Endotech have gone in, they've established what people are getting back from utilizing their system.
Right.
Now, did I say value? I wrote it down. If we're going to provide a solution, then we need to provide value. And I think that's why I went off on that tangent about the company that my wife was watching at the weekend. It's because they're not providing value. Why has my business been theoretically successful? Is because I provide a value to my customers.
Sure.
Right? And I'm taking a slice off in the middle. So the difference between IncomeSec and JCF is that JCF pioneered an idea that is unique, and I think is still unique. And it's built something which is unique to itself. IncomeSec has no product. We've not built anything. All that we've done is we've taken a slice of the pie in the middle. Now, and indeed, you might
talking about combining both, combining the strength of both.
No, you see, here's the thing. Ideally, that's what you do, right? You can build a base from taking a slice in the middle, right? Because you're always going to make you're going to make anywhere from 10 to 25, maybe 30%, right?
We can be the front runner for Indotech, for example, if their strategy is really that well, right? I mean, to us, I think to me, it's one of the strategy repository, right? If it works, right? I mean, I do believe there's merit in terms of the conservative strategy that we have been adopting. At least I can say that, to my knowledge, nobody has lost any money in JCF. They have earned some money, some more, some less, but so far people have been profitable, right? And that is due to a certain strategy and a certain mentality behind, right? So yeah, I do feel that there's merit in more conservative kind of approach. Whether Indotech can continue to maintain their ROI, and across different, I guess, categories or for longer periods, that is something we will have to see, right? How long has the company been in operation?
I don't know.
Do you know?
No, I
Okay,
haven't read that bit.
right.
You see, here's the other thing. So Nick, I got Endotech from Nick. Nick is like, his company. What does his company do? They're raising funds.
Right,
They're building out projects. They're already doing it, right? So that's where they kind of bring some value. And I'm at a loss at the moment to. I'm not saying that we can't do it. I'm not saying that JCF is.
I know. Yeah, I know that we're trying to figure out. It's, I mean, basically, there are different pieces of the puzzle. I think that's at our disposal now, right? And I think the trick is to find a way that can piece together the various pieces.
I mean, does does JCF actually have? It doesn't have 50,000, does it?
Now it's less than 50,000. It's about close to 50,000. Yeah.
The other question I have, which I was asked by somebody, and I can't remember knowing the answer. I can't remember if I've asked it or not. I can't remember. And this is slightly off topic, but I've only just remembered to ask it, to be honest with you. So if I've invested $100 and that $100 has gone up by 120, right? Because the fund's grown by 20%. Of that $20, 75% of that $20 goes back into the fund.
No, it goes to what's called it's kind of like retained earning, the dividend pool, which is, well, technically part of the fund, but it's still separated from, it's not, let me put it this way. It doesn't belong to anybody. It becomes public in a sense, right?
It's
So
kind of held in escrow.
it's still somewhat different from, you know, it goes back to the fund. You see?
Okay,
It,
so
yeah.
it's held by the fund, but it's not utilized for anything.
It is utilized in the sense
Okay.
that if the fund enters position, for example, that $20 dividend potentially will also grow. Does it make sense?
Not really. So I'm okay.
Uh,
Let me let me put it this way,
I'm,
right?
yeah.
So just to work out the percentages, right? So we've actually had a really great year, or we've really done some great trading, and that $100 is now $200, right? So the dividend is $100. $75 goes into this place. $100 is kept, right? That's still trading money, right? So we're going to reinvest that $100. Or indeed that $100, that initial investment of $100 just stays in the fund and it's operational, right? 75 gets put into this holding account, and then the remaining 25%, part of it is taken by the fund, part of it's paid out to tokens, and part of it is the donation element, right? So that's boom. That bit I understand. The thing that I want to know about the $75, which is in this holding account, if I now say to you, oh, okay, this is great. I appreciate that I need my money back now, so I want my $100. But not only do I want my $100, I also want the value of the $200 that we've made, right? Less the fee for JCF for doing its business, and less the dividends that I've already received. So I would theoretically, so if we forget the $25, which has been paid out already, I want my money back. I want $175. Does that make sense?
That makes sense, but that is not that's not how JCF is designed. And it will not happen that way. Okay. The reason is that $75 will be in the dividend pool, and it will be continually be paid out. Okay, as you know, regular dividends to our participants. It actually provides an incentive. It's designed to provide incentive to stay with the fund, actually. And also one more thing to note is that even if your $100 has earned, let's say, you know, another $100 in a 100% ROI, you may be getting more or less than, you know, the $75 actually. This actually depends on how big the total fund is and who are the other players that are also participating. That means because we have something very unique, which is the share dividend part. Okay. So if JCF is a really small fund, let's say your $100 is already you're the biggest investor. Okay. Then pretty much that $75, you will get very little back. Okay. That's what happens. On the other hand, if you are putting $100 and someone else is putting $1 million, I'm just, for example, right? And there's $1 million and $100 all gain, let's say, you know, 100% return over this course. Simply due to share dividend, you will actually likely get in multiples of your initial $100 investment. I'll give you an example. When JCF pays the first dividend that was accumulated for over a year, the smallest amount invested, 10 US dollar, actually got a dividend of 55 US dollar. That's an ROI of more than 400% plus. Does it make sense?
Yeah.
So if you're putting $100 and the ROI of the fund is actually 100%, you know, you could be getting anywhere from, let's say, a couple of dollars to to hundreds of dollars.
Okay.
Does that make sense? And so
Yeah,
it's a bit, yeah. I mean, it's a bit. It's not very straightforward to explain it, but this is
no, it's
actually
not.
how JCF operates.
Okay, so it's not straightforward to explain, and I don't
No,
think when people do get that,
no,
they'll like it.
it's not straight. It's not straightforward. All we can say is that if you're the smaller guy, you get bigger ROI, and that's what you will see
Okay.
in JCF.
So if I was investing 1 million, I wouldn't invest it in JCF because it's
Unless you
not
have other purpose.
such as.
Well, you are satisfied with, let's say, 10 to 20% ROI over your with a safe return strategy, and you can also do good with your money.
Where do you get the 25% from? 10 to 20%.
No, I'm saying that for, you know, if we do the strategy right, and if the crypto market is growing, right, then we should be expect something, you know, much more than the 10% you get in stock in general.
Yeah,
So
if and should, we can't, you know,
exactly, true. There's no
we have to
guarantee for
deal
that.
with
That's true.
reality, okay?
Right.
And so the example, I think this is where you can sit there and you can calculate what the examples are, because you've got evidence. And so somebody said to me, well, what happens to the money that the fund has benefited? Who's getting that then? Because if I'm sitting there going, I can invest $100, 1,000, 1,000,000, doesn't really matter, right?
Okay.
I take that
All right.
money and I can generate that into, I don't know, 40% that I know that I'm going to generate. Why would I invest it and get maybe 5% back?
Okay.
Because
Right.
if you're saying actually of that 100% dividend, you're going to get paid at best 45% of 25%, call it, I don't know, 10%, right? What? Why am I giving 90% of my dividend profit away?
Okay. So,
Because
right.
that's what you've got to think about. People will not look at this as being, they'll look at it first of all from the point of scarcity. They'll look at it first of all from the point of, so you're telling me I'm giving you 90% of my profit. Why am I doing that? And when I take my money, why are you not giving me that 90% of the profit back? Because you wouldn't have that money if I hadn't invested it in the first place.
Right. So Mike, I think if an investor comes to us with this kind of expectation and mentality, then that investor may not be someone who's suitable to join the main fund as you know, or there should be a sweet spot where this investor will join the main fund, you know. Sweet spot meaning that, you know, because he's expecting to get a certain return, you see. Now, that being said, I believe we can design other funds that's more tailored to this kind of expectation. Okay, which is, for example,
yeah, because I think that's going to be a more prevalent
okay,
expectation.
yeah. So if that's the case, if you think that's the market, if that's our audience, if that's the audience you have access to, if you think that's how we can serve them better, then my feedback would be let's design another fund. In fact, that's why we had the so-called VIP fund. You know, the VIP fund was designed or was, you know, to actually minimize the share dividend aspect. Okay, so like right now in the main fund, actually the share dividend and the common dividend is 50-50. You can design a fund with a share dividend of, let's say, only 5% or even less, or even zero. Okay, when the share dividend percentage is tilted to zero, it's just a traditional fund, no different.
So I
Does that make sense?
think, yeah. No, that makes sense. So I think here's the thing: to gain traction, right?
Right.
I think we should have it so that
so we can design another fund then. That might
yeah,
makes more sense to I guess the clients you're talking about, right?
now yeah. So I think that if you've got a fund where the fund operates, you see, here's the thing: if the custodian is still the custodian, and we have an API that will link to their Binance account in the same way that Endotech do,
Right. Right.
and we operate on a smart contract on their account, right? Then we're not holding any assets. We're just trading on their behalf.
Right. True. Right.
And then the price we charge them for that is a percentage of the profit.
Okay. Right.
And a percentage of that profit will be
doable, right?
let's say it's going to be 25%, because they're not paying any annual fee, they're not paying any setup fee, they're just paying 25% of profit. Well, why would I do that? Well, because you're not doing anything. You're getting 75% profit for doing nothing. Where does the money go? 7% goes to a recipient of your choice. Can't be yourself, family member, whatever, right? Or a charity. 13% goes, no, sorry, what am I doing with my maths? 18%.
Yeah.
18% is what we charge for our operational costs.
Okay.
Right? Where are we adding value? Where are we providing value? We're providing value that we're delivering the investment strategy, and they're not doing anything. This becomes passive income.
Okay.
Right? Where are we adding value? We're contributing to the well-being of society by allowing some of the profit that people make to be gifted to either loved ones that they want the tokens to go, they want the profits to go to,
legacy purpose. Yeah, legacy.
Or some form of, if we make that the initial start, then I think we overcome I'm not sure whether or not we overcome the trading element. We'd have to see whether or not because I think that's what Endotech are doing, and I think that they probably, you see, it boils down to whether or not you're supplying advice or not, and whether or not that would be deemed as supplying advice. But I reckon there'd be more traction on that, and then we can sit there and say, all right, there are other funds available here. Because once people understand that they're making money, then they might want to actually have more that goes to effectively a basic income one.
Okay.
Some people, like, there's somebody in my AMP group, and she just puts in she's putting like a couple of $100 into a microfinance thing. And she knows that her couple of $100 has contributed to, I don't know, X amount of people, Y amount of projects. And some people are happy just going, well, I don't care. As far as I'm concerned, I've put that into that. I don't care about having the return. I'm just happy to see it grow if it's, and I think, there's a modest way of doing that. But anyway.
Okay, good. So actions. What do you think is the most important thing we should do to move forward?
Well, I think we need to know what the license requirements
Okay.
and costs and
In
time frame.
Taiwan, right?
Yeah.
Okay. All right. So that's one.
That's
Okay.
a big thing.
So that would be my to-do. Okay. Good.
I think then that you see also the other thing there, right, is with that idea, whether or not we then we're able to act as a middleman, right? Because then we can sit there and go, well, all right, we'll utilize your fund and your funds in your account, and we'll trade on your behalf, and we'll take a percentage for that.
Sure.
You know, we might argue that cumulatively that gives us better buying power, although it doesn't, because we're operating on individuals. But then it might, what it might do though is it might enable us to go to Endotech and let them, you know, then we can sit there and spread a difference between, because the thing is, you can't actually physically hold the money, can you?
No, it has to be a regulated entity, you know, or it will be kind of like a private equity kind of operation, meaning that it's closed. It's not open to just anybody. You have to be kind of selected, invited, you know, and you know, it's kind of like a private club. So you're basically doing a private equity fund, which is, to my knowledge, is more or less regulated, you know, if it qualifies for private equity criteria. For private equity,
It will still be regulated under the FCA though.
right, right. But I mean, potentially it would be less, from my understanding, it's less, you know, strict or less, there's less of a barrier if you just want to set up like a private equity.
I see the way,
essentially it's, yeah.
yeah, it may be, but the way the FCA have done it is if you're doing anything in crypto, it's the 10 grand, regardless of what the strategy is.
Okay, okay.
The moment you start taking people's crypto assets or taking money for crypto or doing anything in crypto, then.
Okay, okay. Then probably the safest way, or the, you know, the more affordable path now is kind of like an advisor, like you said, right? Providing systems, softwares, and education, essentially, right? Kind of like, you know, helping people to set up and do it with you, right? Not do it for you. There's done for you and done with you, right?
Yeah. Yeah. With the current setup, then with the money that's already there, are we going to start transacting that? Are we going to start generating some profits from it, so we can illustrate?
My current thinking is that we want to start to make the strategy running now. Okay. So start to execute the strategy, which is why I recorded the you know, the indicators. So have a look. Okay, it's just 10 minutes. Okay, and let me, or we can play it now if you like. I mean, I mean, but my thinking is that once we get, let's say, Poet to tell us, and we can make collective decision, at least we can test and verify our strategy to see if it's actually, you know, generating profit. So that's that. Okay. No, that video is not yet. It's here. I have asked to be uploaded. I can play it if you want. It's about 10 minutes. Okay. And the other, I think the other thing is, yeah, but for the time being, until we're clear about the regulatory aspect, I don't think we want to admit any new additional people, a member to the fund.
No.
You know, yeah, the fund should be closed for now.
Yeah, but it still doesn't stop us from investing with the money that's in there.
I'm sorry, you mean?
We can still continue investing. So we can
Right,
still
that's
start doing
my
dollar
plan.
cost averaging.
Yes, that's my plan because we already, I mean, we're not accepting any new members, right? It's kind of like a close club for now.
Yeah.
So yeah, we're not soliciting to the public at the moment. Yeah. So I think it's still worthwhile to just test out the strategies, to see how it goes. Right. All right, so regulatory process and also let the strategy start to roll over. Okay, that'll
Yeah.
be, I guess, my part. And how about you? I guess anything you'd like to see on your end?
Um, well, it's just I don't know what to say. What else can I do? I was gonna. I can't think of anything at the moment.
Oh yeah, so by the way, I do have a thought on the blog, which is IM-based interface, instant messenger kind of interaction. I don't know what's your thoughts on that, but I was thinking maybe you can help design the interface for an IM-based kind of interface. And I'm actually thinking about using Telegram, okay? Because Telegram would be secure for communication. And, also, Josh is kind of a fan for Telegram. He would love to develop something on top of that. So, you know, as opposed to design a web or even a mobile interface, I'm actually thinking about it, pretty much a text-based kind of interface, based off, Telegram, for example. But if it works on Telegram, it should work on any other major instant messenger as well.
Okay.
Yeah. So what do you think? If you can maybe just lay out or design that, I think that will help things to move forward actually. Because that cuts into the accessibility part as well.
I don't understand what's the purpose
No,
of it.
it's just you were thinking about doing wireframes, right? Process, which you already have a process flow of all the flows. I'm just saying that turn that into an instant messenger interface.
Yeah, no, that's fine. I get that. I get the bit that I don't mind doing the work, but what I don't understand is why. What's the point?
Oh, okay. So part of the point is again to make the whole thing accessible, I guess, to people. And also easier to design interface as opposed to the months of UI interface design that NSG she has estimated, right? I guess it's just the question of can we maybe build a really simple interface based on chats, right? Instant messenger.
For what?
I guess that's
What's
the
the
thinking.
purpose? Why?
Well, the purpose would be that might be the fastest way we can actually set up something that people can start to use. Okay, and I guess across the.
What do you mean start to use? What's the purpose? Why are we doing it?
Okay, we do have the wealth platform, right? And also the wealth being, I guess, a multi-token user interface, which you're not happy about, right? Thinking that right now it doesn't really provide all the important details. I'm just thinking if it's possible to provide the necessary details that you think are important or relevant or logical, but with an instant message kind of interface, or to the human being, the human client. That
Okay.
yeah.
So
That's
doing it. Okay. So doing it on Telegram as opposed to a web interface.
Exactly.
Okay.
Exactly. Right.
So can you do that with Telegram then?
Yeah, I mean Telegram, you can assume that you can do menus and even it can be made into a bot, right? But at the very least, we can create a Telegram bot, that any client can add to as a friend, and then you can just interact with that bot. And through that bot, you can also link to a human operator, right? But some basic thing, really basic thing, like checking my balance, right? Let's say I want to invest, provide me with the banking details, things like that. Or, I want to withdraw, transfer out a certain amount, right? So, and I will provide let's say the wallet address, and we can do some simple SMS verification. Those things can all be done through I think, instant messenger interface. Even KYC, like KYC, input your basic information, upload a picture for your passport, right? I think all those things can be done through a simple IM kind of interface. So I guess the whole idea is to leverage.
Still gonna need to do like Figma and stuff like that and get it laid out correctly, aren't you? Because I mean, Josh is gonna, no matter how good I mean, like, look, he's a proficient coder, right? So
right.
he was ready to code the website. It's just what he didn't understand was what it was going to look like.
Right.
So that's why he went to Exxon or Tron or whatever they were, or Tom, because he knew that website, he knew that layout. So he went, well, why don't we just use this?
Right, true. Right.
But again, when we asked him about that, he was going on about Figma. So as whether or not he's coding on a website or he's coding on Telegram, it's irrelevant. It's still going to have to go through it's not irrelevant. It's just, I don't think it makes a difference because the process beforehand has to happen. The process beforehand is, what's it going to look like? And do we know that, from a user interface, it's the right thing to do. And I think that whether or not it's a Telegram app, you see, I think the advantage of using Telegram, for instance, is Telegram will take care of whether or not it's on the portal or app on your phone or your computer, so it's irrelevant. But that bit is taken care of with a Telegram aspect.
Right. And Telegram has account and it's secure, right? So all those aspects are taken care of. Yeah.
I suppose so. I don't know if it is or isn't secure. I don't know.
It's the most trusted IM by crypto community.
Just because it's trusted doesn't make it secure. Twitter was trusted by billions of people, still hacked.
Right.
Okay.
All right.
Okay. So, but I mean that whole, okay, fine. I can still do that, but it's still going to take time to get it to, because it's still the same thing, right? The fact that we've changed the underlying protocol is still going to take.
Hopefully, we'll simplify the process a bit.
Maybe. Yeah. Okay. Other than, so I'm still researching. I'll still walk away and try and figure out what it will take to go to the SEC.
Okay.
And do that.
Oh yeah. The other thing is, if we can actually get some partners or clients who are in a position to get regulatory approval, I think that would be great as well. Right. Again, the who, not how, right? I mean, if we have someone who can get regulatory approval as part of our partners or even as one on our core team, that would be fantastic, right?
Yeah, I'm working on I'm trying to see whether or not my nephew's in the States. He's actually got on parental leave, or
okay. Oh, really?
Yeah, he basically gets like 6 or 7 months off. I'm like, well, what are you doing? Not like he's got any work to do. He just sits around and
that's a great job.
That's
a great job.
And so I sat and I thought, well, he's getting paid leave for that period. If he sat there and said to me, well, actually, to get regulated, all you would need to do is X. It would cost this, and it would need 20 days of time. Well, we could offer him tokens, and he would spend his 20 days doing it.
Mm-hmm.
That was kind of like where I was thinking about that.
Yeah.
But it's whether or not it would cost us $10,000 or not, or
Okay.
20,000 or whatever the amount is.
Okay. Yeah.
But
Maybe
with
a
that,
competent lawyer can get that to $1,000. I don't know.
well, yeah, maybe. But so here's the thing. So then we would have a different position to be in. Then we would be
right.
then even if we went for the FCA, right, and we said, right, okay, it's going to cost us £20,000, right?
Right. Mm-hmm.
I'm playing with numbers here. Well, then we go, all right, 10 grand for the lawyer to do it and 10 grand for the application, and then we'll be regulated. Now all we got to do is find somebody with £20,000 who likes the project,
Right.
and then we give them then they get a share of what we're going to do.
Right. Mm-hmm. Right.
And they're going to sit there and go, you mean I can get 20 grand? I pay you £20,000 now. We set up the fund, we move forward. But you see, then they would be going, well, all right, if you get FCA regulated, how quickly before you start making, a return on investment? Because if we sat there and said they get 0.5% of profit or whatever, then they're gonna and if we're talking about getting, I don't know, a percentage of the trillions that we're going to be doing, 20 grand is a really easy buy-in. I think also
right.
I think also what's important is, and I picked this up in I can't remember whether it was Dan Sullivan or Anti-Fragile or somewhere else, but it was talking about how it might have been Anti-Fragile, looking to the future is where you can make money.
Right. True. We have to start from the future and track backwards.
No, not like that. Looking towards the future and understanding where the future's sort of like where it's going. So in it, he uses this character called Fat Tony and another character called Nico or something like that, right? And they both made profits out of shorting on the 2008 financial crisis. And indeed, he uses some Roman philosopher or something from 2,000 years ago who took options on oil presses in Spain, olive oil presses in Spain, and then made huge amounts of money when the olive oil boom happened, right? And I think it's about looking at what we understand in the markets today, and then seeing, not necessarily, you can't see a black swan, but where are all the markets sitting because they don't believe a black swan's coming, and then are we able to, was it in 1929, just before the crash of the New York Stock Exchange, some guy realized when he was walking into the stock exchange that there was some kid who opens the doors for people arriving, was going in there and putting money on the stock market. And he thought, this is crazy. If everybody's doing it, then the market's in a bubble. He pulled out all his money. And then literally, I don't know if it's a week or a month later, the stock exchange, just the whole market crashed and everybody lost all the money. But he was in cash because he'd seen that the bubble was too big. So yeah, I'm just trying to think. That's kind of where I'm thinking, whether or not, for me, that's where I think we could be creative with our thinking. That's where we can provide value. But
yes, great. Thanks. Yeah. All right, thanks, Mike. I hope this discussion was valuable for you.
Definitely. I think we've got to think laterally around where we're at, really.
Okay, yeah. But I do feel that, you know, although things might not look good on the surface, this is the best time for new
Yeah,
opportunities and new thinking. Yeah.
for
And
sure.
yeah. And I think I think the market is there, the growth, you know, is about to potentially, you know, show up. It's just how we want to position ourselves, right? So yeah, please do check out the strategy video and also my blog, right? And we can have a chat. And I'll survey on I'll delegate the strategy and also the I guess the survey, yeah, for the Taiwan market. All right. So thanks a lot. Make it a great week.
And you, my
All right.
friend.
Take care. Take care. Yeah. Bye bye.
Right.
Bye.